Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Government infra spending plunges 42.6% in September as the Department of Public Works and Highways faces scrutiny and typhoons slow projects. New Finance Chief Frederick Go says revenue targets must be realistic, with the Department of Finance warning that slower growth and corruption probes could hit collections. The Financial Stability Coordination Council will map bank exposures to big corporates, giving the Bangko Sentral ng Pilipinas and the Securities and Exchange Commission a new early warning system for financial risks. Treasury bill rates may ease this week as markets price in a possible December cut from the Bangko Sentral. The Bureau of Treasury is offering 22 billion pesos in T-bills. The Department of Health seeks a nationwide vape ban amid misleading security claims. The government's infrastructure engine just hit a massive speed bump. Infra spending fell 42.6% in September to 78.7 billion pesos, down from 137.1 billion pesos a year earlier. Delays in contractor payments and inspections by the Department of Public Works and Highways, along with frozen accounts under investigation, slowed disbursements. Foreign-assisted transport and defense projects partially offset the drop, but weaker public construction pulled third-quarter GDP growth down to 4%, below the 5.5 to 6.5% target of the government. The DPWH has lifted the suspension on local civil works and introduced stricter safeguards, including live stream bidding, geotagging, and enhanced verification. Overall government spending rose 5.2% to 4.48 trillion pesos, with social services prioritized in 1.3 trillion of planned expenditures. With corruption probes growing and revenues under pressure, the government is resetting expectations. Finance Secretary Frederick Go says realistic revenue targets are crucial as corruption probes and slower economic growth threaten collections. By the end of September, revenues rose to 2.24% to 3.37 trillion pesos, reaching 74.49% of the 4.52 trillion peso full-year goal. Go called for spending optimization, digital reforms, and quick, small wins to improve taxpayer compliance. He also met officials from the World Bank to secure disaster financing, including $500 million for typhoon recovery, and discussed trade and investment with British Embassy Manila, focusing on the Luzon Economic Corridor. The Philippines is tightening its defenses against financial shocks. The country is strengthening our oversight. Next year, the Financial Stability Coordinating Council, or FSCC, will map banks' ties with major companies to spot systemic risks. A unified protocol will coordinate responses across regulators. FSCC Chairman and Bangko Sentral ng Pilipinas Governor Eli Romolona Jr. says staying ahead of the risks is the Council's top priority. Moody's Ratings warns that corporate links can boost banks, but also raise concentration risks. The Council says banks remain resilient, supported by strong capital, liquidity, and loan loss buffers. With markets betting on looser monetary policy, short-term borrowing costs could start to ease. Treasury bill rates may soften this week as investors brace for a possible rate cut in December. The Treasury is offering 22 billion pesos in T-bills. Yields are expected to follow last week's modest market declines after the Bangko Sentral ng Pilipinas, or BSP, signaled another 25 basis point cut. BSP Governor Eli Romolona Jr. says that the rate easing could extend into 2026 amid corruption concerns that may slow government spending. The Treasury is also aiming to borrow 158 billion pesos domestically this month to help cover the budget deficit. With our power costs still among the highest in Asia and energy security now a critical competitiveness issue, the Philippines is turning to nuclear as a possible game changer. Major Philippine business tycoons are keen on developing nuclear power as the government prepares to open the sector. This, according to Energy Secretary Sharon Garin. Pangilinan-led Meralco, Razon's prime infrastructure capital, Ramon Ang San Miguel Corporation, and Aboitiz Power have all expressed strong interest, with Maharlika also encouraged to join. Under the Philippine Energy Plan 2023 to 2050, the government is targeting 4,800 megawatts of nuclear capacity by 2050, a move seen to help stabilize prices, cut reliance on imported fuel, and boost long-term investment confidence. The DOE says that the apply process construct phase begins in 2026, with initial projects targeted for completion by 2032, setting the timeline for what could be the nation's most ambitious energy shift in decades. The government is moving to make medical aid faster and more accountable for Filipinos who need help the most. The Department of Social Welfare and Development has sealed a new agreement with hospitals and pharmacies to strengthen medical assistance under its crisis aid program. The partnership sets clear payment procedures and reinforces obligations to ensure faster, more transparent service for Filipinos facing medical emergencies. Secretary Rex Gatchalian says that the program has helped more than 8 million people this year, including over 600,000 who received guarantee letters for immediate treatment. The DSW says that the new agreement will help prevent delays, disputes, and service gaps, a key step as demand for medical aid continues to rise. With youth addiction surging and health risks growing, the government says that the country may be facing a new public health crisis, this time driven by vapes. The health department is calling for a nationwide ban on vape products, warning that aggressive marketing has misled the public into believing that they're safe. Officials said AIDS, HID, the dangers of toxic chemicals in vapor and devices that can cause heart disease, cancer, and severe lung illnesses. The DOH cited a survey showing that 7 in 10 Filipino youths ages 13 to 15 have tried or used vapes, a trend driven by colorful packaging, sweet flavors, and wide online access. The agency also noted that the country's first vape-related death last year after 2 years of regular use, a warning sign as cases of lung injury continue to rise globally. The Philippine equity market is doing what it does best in times of uncertainty, and that's swinging between hope and fear. We opened the week off a 3-day rally driven by bargain hunting, a strong balance of payments surplus, and growing bets on a December rate cut. Joining us now is Manny Ocampo, the President and COO of the Investment and Capital Corporation of the Philippines. Hi, Manny. Good morning, and thanks for being here with us.
Morning, Maiki.
Manny, we've had a wave of bad news. The index sank to pre-pandemic lows near 5,500, and yet that bottom seems to be holding. What do you make of this breather that we're seeing? Is this just a technical bounce?
We came off a bit of lows last week. So over the past few days, that has been a technical rebound that we saw coming back to about 6,000 levels. Early trading seems to indicate maybe some give again on the index, and we believe it'll, the market will trade in a band and see where we go from there, depending on news and new things coming out. Maiki.
Right now, we're down 1% to 59.36. Manny, what do you think is the biggest risk premium to the market right now?
Well, still politics. I'll have to say that. We've seen announcements come out about arrest warrants being issued late last week over the weekend, and we'd like to see government really carry on and follow through with these with serving these warrants and. Bring people to answer for their intransigence. So we'll see that maybe we'll see new bigger fish come out, and we hope the government will be serious about taking them to task and bringing them to justice.
Speaking of the government, Manny, we had this big cabinet shakeup mid-year into the president's midterm. Executive Secretary Lucas Bersamin, Amena Pangandaman resigned. Finance Secretary Ralph Recto is now the new Executive Secretary, and Frederick Go, formerly the President's point man for Investment and Economic Affairs, is now at the helm of the DOF. What does this reshuffle tell you?
Sorry, I think the reshuffle is good. The president is bringing in what I will call an A team going into the second half of his term, and we hope the team will remain until the end of his term, and so that there's a bit of continuity. And the personalities behind the new team. Let's start off with Secretary Dizon at DPWH. He's doing a great job, but maybe looking at what went wrong. I think, and we hope that from here, knowing what went wrong, he moves forward in implementing new things at the DPWH, because that will be, he'll need to move forward at some point.
Yeah, Manny, I just want to jump in there. Speaking of implementing new things, a really big thing for the market, the Securities and Exchange Commission overhauling the REIT laws. It's to open it up for infra. What are your thoughts on this huge development?
Well, that is the big story. The SEC recently put out the proposed revisions to the REIT law for comments. And, if you read through it, it's really the SEC saying that we'd like to gear up maybe REITs for infrastructure projects, traditional infrastructure and digital infrastructure, tollways, water concessions, and the like on the traditional one, and then, data centers and even fiber optic networks on the digital side.
They're going to be opening up an entirely new subclass. Manny, in just 3 years, REITs have pumped in almost 80 billion pesos into the market, becoming one of our few bright spots. How excited are you about this development by the Securities and Exchange Commission?
Very excited because, infrastructure will be a lot bigger. So you may, where you had several real estate REITs come out, raising about $1.5 or so billion. For infra projects, one REIT may be about $1 billion worth. So, and there are several there.
Yeah, and in terms of the timing of this overhaul, we're in an easing cycle. Expectations are for at least another 25 basis point rate cut in December, depending on November inflation figures, maybe a little bit more. We'll find out soon enough. How does this environment bode for this REIT, this new subclass of REITs?
Oh, it works well for REITs, no? Because REITs are, it's a dividend story. At the end of the day, if the interest rates come down, then it does well for REITs because issuers would be encouraged to come to market, not having to pay very high dividend yields, for example. So, that was the case back in 2000, 2001. Rates were relatively low, and we saw a lot of REITs come to market. If BSB continues with its cuts in December and maybe hopefully into 2026, then that may see a new batch of infrastructure REITs coming to market, Maiki.
Okay, let's talk now about the longer reinvestment period. When a REIT raises money, the sponsor is required by law to reinvest those funds. The old one-year deadline forced principals to deploy capital quickly rather than strategically. Nothing is set in stone yet, but the SEC is proposing to move that 1 year to 2 years, to extend that by another year. Does this strike the right balance between flexibility and discipline? What are your thoughts on this extension, Manny?
Well, in fact, in previous consultations, I think the feedback was for a term longer than 2 years, but SEC is proposing. I think it was, feedback from market was that a 3 to 5 year reinvestment period was, something to give the sponsors some time to see what projects to reinvest in. And that's something they would need time to make strategic investments rather than tactical investments that, they feel rushed into.
When it comes to REITs, all the big issuers are already there, Manny. But this is going to open it up for an infra theme. What are your thoughts on this, and when will we really feel these? It's going to take some time, so we're looking at maybe these things taking shape in 2027, maybe use 2026 to lay the groundwork. What are your thoughts on this, Manny?
Well, you probably will see different names now in coming to the REIT market. On the infrastructure side, you probably will see the Metro Pacific Group with their tollways, San Miguel with their tollway, San Miguel Infrastructure with their tollways also, Aboitiz Group maybe with their airport projects, PLDT with and Globe maybe with their data centers. So very interesting names and good names at that. I think it opens, a class of investment alternatives for people to get into. And, it should spark interest again in our markets.
Yeah, definitely something to look forward to. Manny, the SEC is pushing hard. But what about the PSE? Given how fragile confidence is right now, what do you think the gaps? What are the gaps that need to be filled by on the private side, on the PSE side?
Sure. You have SEC trying to make things easier for issuers, for investors, and open up the field. No, the hope is that the stock exchange would also move in that direction towards introducing reforms to make it easier, to make it faster to list. So that's just to be consistent, both capital market regulators moving in the same direction. Maiki.
Okay, Manny Ocampo, thank you so much for your time. That's all the time we have for this segment, but we'll have you on again soon. Thank you so much, Manny.
Thank you also, Maiki. Thank you.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. We start with how the U.S. and Europe closed overnight, setting the tone for trading here in Asia this Monday morning. Wall Street rallied on Friday as investors boosted bets on a Federal Reserve rate cut next month. But all three major indexes still finished the week higher. The Dow Jones up by 1%, S&P 500 up by 1%, and the Nasdaq up by almost 1% as well. Now, U.S. stock futures rose Sunday with investors hoping to extend Friday's rebound as the critical holiday shopping season begins after a volatile week on Wall Street. With many traders taking an early break ahead of Thanksgiving, the week could see lighter but potentially more volatile action. All eyes will be on consumer spending as the holiday shopping season kicks off with Black Friday sales. In Europe, markets closed mixed amid worries over high-tech valuations, while defense stocks fell on signs of progress toward ending Russia's war on Ukraine. Let's check on how Asian markets are doing this Monday morning. Right now, we're seeing a mixed picture. The Nikkei 225 is deeply in the red, down by 2.4% in early trade. Hong Kong's Hang Seng Index higher by 0.6%. Shanghai's Composite lower by 0.5%, and Singapore's Straits Times Index up by 0.3%. Here at home, the Philippine Stock Exchange Index rose further last Friday, pushing closer to the 6,000 mark on strong buying interest and bargain hunting. PSEI jumped over 1%, closing at 59.97. Value turnover hit 9.2 billion pesos. Analysts say Philippine stocks could extend gains this week if catalysts hold or emerge, but without them, the market may slip back into profit-taking amid ongoing worries about corruption and the economic outlook. Taking a look at the main gauge today, as of 10:25, the PSE index is in negative territory, down by 1% in early trade to 59.37. All shares index going the other way, up by 1.9% to 34.82. Now, taking a look at these sub-indices, we're looking at a mixed picture here. The financials, holding firms, and property counters and services counters are leading the market's declines right now. Total volume is at 100 million shares, valued at 1.2 billion pesos. Advancers, we've got 65, decliners 61, and 67 stocks unchanged. On the currency front, the peso opened at 58.83 against the dollar, up from its previous close of 58.86. Now, another thread in the flood control corruption scandal is unraveling, this time inside a company behind a billion peso hotel project in Clark. The daughters of 3 officials accused in a multi-billion peso flood control kickback scheme have exited a Pampanga property firm tied to that project. MBB Global Properties removed Macy Maglanque, Sunshine Bernardo, and Fatima Gay Bonoan de la Cruz in August, replacing them with Candaba Mayor Rene Manglanque and 2 local executives. The move came weeks before Senator Panflo Lacson identified MBB as an alleged front used to conceal funds from Central Luzon flood control projects. Incorporated last December with 10 million pesos, the firm is now building the 1 billion peso Windham Garden Hotel. Criminal complaints have been filed, and Nancy Maglanque has been recalled from her overseas post. This deepens concerns about how public funds may be filtered through private projects and why stronger corporate transparency and procurement controls are critical. A Philippine cultural landmark has found a unlikely new steward. Batangas representative and millennial entrepreneur Leandro Leviste has taken over the Solaridad Bookshop, the 59-year-old ermita institution founded by national artist F. Sinil Jose. The Jose family put the shop on the market earlier this year, saying no one in the family could continue running it. Though unprofitable for years, Jose kept Solaridad open out of devotion, managing it himself well into his 90s. Leviste says he intends to preserve the bookshop and honor Jose's legacy. In other news, tech tycoon and Converge founder Dennis Anthony Uy is calling on President Marcos Jr. to abolish the 12% VAT on electricity and internet, describing it as moral restitution for taxpayers after the massive public fund plunder now under investigation. Uy says selling recovered assets like jets and mansions is not enough to offset the economic damage borne by Filipino taxpayers. His proposal to remove VAT on power, telecom, and water aims to free up cash for households and businesses, boost consumption, ease pressure on SMEs, and help stabilize prices. Uy challenges Malacanang to turn public outrage into tangible relief, using VAT removal as a direct way to return stolen funds to the people. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.